Good evening, this is Nick Inman from VolumeProfileTrader.com and part 2 of the weekend update. And what we're seeing here, we're looking at Apple, and Apple looks like it's at a potential support level at the 363, 360 level, where it's been a great buying opportunity. Every time it's reached those levels since we've broken out from those levels. So should this work again? Well, it should, and if it doesn't, what we're going to get, well, we're either just going to keep moving lower, which will make it the easiest trade because we can just take a small loss quick, or we get some kind of bounce and then a lower high and some type of rollover to the downside. It's hard to say which is which, but given the fact that Apple has remained probably one of the strongest stocks, especially in terms of volume, it's been a market leader. It's this 200-day moving average. It's been a great level to buy at since the market lows. So it's hard to say that it won't be again, at least for a test of the $400 level, which was this big volume spike, basically in this entire range. So keep an eye on Apple. It's at an opportunistic buying opportunity, and if you trade options, I would be a bull put spread, which is the seller of a higher strike put and the buyer of a lower strike put to collect some premium. And if Apple continues lower, you just take your small loss. You can hold your lower strike put if you want to see, appreciation, or you can buy, for example, an at the money or slightly out of the money call, and then you can sell an out of the money call against that at a higher strike and try to play Apple that way. But I would be playing Apple for a range-bound market rather than a potential for a breakout to the upside to new highs. But that's just my personal opinion. If you feel that Apple can break out to new highs above this $400 level, then you should trade accordingly and basically manage your risk appropriately. Another name I'm looking at for an opportunity for a bounce is Stericycle. And the reason why is because it's sitting at its value area low for the year. And as I zoom in, you can see that the value area low has been a great opportunity to buy Stericycle every time it's come into those levels. And maybe this time it doesn't work, but given the fact that Stericycle was up 0.75% on pretty good volume today, given the fact that it was a short day, it looks like we could have an opportunity for a bounce on Stericycle. One thing to note is the volume profile chart for the month of November. The point of control for Stericycle is at the bottom of its range. So if we start to get a move above basically today's intraday high of 77.43, we should see a nice move back up to the top of this high volume area around $80. So if that's your type of trade, then this looks like a decent snapback, and it's definitely a fast money trade, quick profits, but it's a trading opportunity. The best part about this trade is you can have your stop right under today's intraday low, assuming that Monday or Tuesday, whatever, makes a new high. Assuming today's lows hold, you can have your stop right under today's lows, because your expectations are we will bounce at these levels, and these are the lows on a move up to 80. Now I want to cover GLD because GLD, it's a popular trade, and a lot of people have become bearish of GLD of gold since we've made this very volatile topping pattern back in September. But for those who believe that the gold story is still good, and I am one of those believers, we are coming to trendline support, which has been a valid support line since the beginning of the year, and it is October's point of control level. So the low 160s, you're looking for a bounce in gold, and if we get a bounce and break this downtrending line, which isn't a resistance line. I wouldn't call it a trend line because it's only the shortest distance between two lines, 2 points, I mean. But really what it means is that we're probably range bound between these 2 point of controls, November's point of control, October's point of control. So if you have to ask me what's my bias in gold, I would say we are at a short-term opportunity to the long side. Now, whether that means this market, this GLD gold continues higher, reaches the 2011 highs, it's tough to say, but I wouldn't be surprised. Now, silver's a little bit different because it had a nice trend at the beginning of the year, and that was clearly a top. And since then, silver has had some nice moves both ways, and now we're in consolidation mode, and it's frustrating, but you have your levels marked off on silver. And if we zoom in, you notice if I draw some lines, September's point of control has been support since silver has topped out, and you can see the point of control top out in November, a nice move down, and we've had a high volume. Well, look at the volume relative to this area. So between, let's get the exact levels, 32.75 and 32.25, 50 cents of basically no volume. And below that, below 32.25, we have the high of the range right now, whereas 32.75, or really 32.25 on the move down, that was the low of the range at the beginning of November. So that's our range right now in silver. We have a downward bias because of how the whole moving averages are trading. They're trading down, but we are in a balance mode. So right now in the market, there's a lot of potential opportunities to the long side as we wait for the market to make a potential bottom, but there is the potential of more downside. And if that's the case, and you aren't short this market, or if you are long this market, I recommend getting in more cash because there could be a lot more downside. If there is more downside, it's important to realize how this started in the first place. Therefore, next time you get in this situation, you are prepared. And, for example, in the market, we were calling this top, and we were a part of it to the short side. And if you were just watching this while it was going down, then you're in a lot of pain this week, and you would have wished that you have sold up here. Therefore, you could buy at lower levels. If you don't short, if you short, you should have been net short the market with the hopes to cover at lower levels. So, anyways, like I said, there looks to be a lot of opportunities in the market, but we're just not quite there yet. Today's low volume week didn't help. I hope you have a good weekend, and I'll see you on Monday in the trading room. The link for the trading room is at the bottom of the page.